This is Reed Larsen with Old Glory Mint, and we're on location here at the University of Utah at the Utah Sound Money Conference. And I've got James Turk with me here, and we've been talking quite a bit about sound money and things today, but one of the things that we've seen in the markets the last couple of business days has been some pretty sharp declines in the value of gold and silver. I wanted to get your thoughts on what caused that and maybe kind of what you see moving forward.
Well, you know, the volatility is actually a symptom of what you see in the second stage of a bull market. In the first stage, you have apathy, neglect, very few people are paying attention. When gold went over $1,000 an ounce a couple of years ago, it went into the second stage. And the second stage is the longest of the bull market. Third stage is when you have the speculative stage. That's still way in the future. But one of the characteristics of the second stage is increasing volatility. Now, we've had a lot of problems with national currencies, particularly in Europe. And as a consequence, sometimes when people seek to raise liquidity, they throw out the baby with the bathwater, or they sell what they can sell, not necessarily what they want to sell. Plus, there had been some margin calls and things of that nature. So, you know, we've seen volatility before. We're going to see a lot more of it in the future. The key is to look at not so much the price, but the value, and gold and silver both are still very undervalued in my view.
Have any of the fundamentals changed here in the United States or worldwide to cause this, or is this more of a news-driven event that we've seen the last couple of days?
Yeah, that's really a good point. It's news-driven, emotion-driven. The fundamentals, if anything, are worse than they were last week. I mean, they're getting worse all of the time simply because governments around the world aren't really facing the problem that needs to be solved. And what that problem is there's just too much debt. That debt has to be repaid or reneged upon, and they're unwilling to let the debts be reneged upon, which is why they're pushing Greece through the ringer, because that would bring down the banking system in Europe. But it seems inevitable to me that given the circumstances as they're developing and unfolding, we're probably going to face another Lehman Brothers collapse. Maybe this time it's going to be on the other side of Atlantic in Europe. But I think we should be preparing for that. And the best way to prepare for that is to own physical gold and physical silver. And the key is that when you own physical metal, you don't have you're not reliant upon someone's promise. You don't have counterparty risk. And when you're in a financial crisis, and I think this is going to get worse, you don't want your assets subject to someone else's promise. You want to avoid counterparty risk. You want to own tangible assets.
And what do you see happening then through kind of moving forward the next few weeks and on into the end of the year in the precious metals market? You see increased volatility? Are we going to see some wild swings up and down, or more of a consolidation and then a steady march upwards?
You know, it's always impossible to predict. I look at valuations. Gold's still undervalued, so I think it's going to go much higher in the months and years ahead. And the way I've approached the gold market, you know, I continue to recommend what I've been recommending all decade long. View gold to be savings. You know, when you have money, you can spend it or save it. View gold to be money that you don't want to spend. Right now you want to save because it's undervalued. And, you know, accumulate it through a dollar cost averaging program. You know, every month or every other month, whenever your family budget allows, just continue accumulating physical gold, physical silver.
And you've mentioned a couple of times that moving forward that there'll be some wild swings. When prices are down like what we're seeing now, are you looking at those as buying opportunities? Are you looking or do you recommend that people time the markets on that, or just a standard dollar cost average and just do a little here and there?
Standard cost dollar averaging. You know, ask yourself, why are you buying gold in the first place? Are you buying because you're a professional trader or speculator and you want exposure to the gold price? Well, if that's the case, you can, you know, trade futures or options or ETFs or any of the exotic derivatives that are available these days. Or are you looking for gold and silver because it's a way of protecting you and your family come what may, which is, you know, one of the characteristics of sound money. Well, if you answered to the second alternative or the second objective, then just stick to your dollar cost averaging program. You know, if you're supposed to buy on the 28th of the month, just buy on the 28th of the month. Forget what the price is, because in the long run, gold prices are going to go much higher as the problems with the dollar continue to unfold.
You've mentioned also that gold is undervalued and silver as well. How would we know when that condition has corrected? How will we know when gold and silver are no longer undervalued?
Yeah, well, what I generally say is that we're in a situation where we're going to see some structural changes before this financial bust is over. And I think gold will become overvalued, not when you sell it in exchange for dollars, but when you can start spending it. In other words, think about what I'm saying. Gold and silver are going to return as currency. And when people will start willing to accept those for use in commerce, then you'll know that they're overvalued. So the gold and silver that you're accumulating now, when it's undervalued, you can save, you'll start spending it in the future and take advantage of the overvaluation of the metals at that moment in time, buying goods and services from people who didn't prepare properly.
Well, thank you for your time, James. I appreciate your time today. From the University of Utah campus, the Utah Sound Money Conference, this is Reed Larsen with Old Glory Mint.